Welcome and good morning. It is Friday morning. It's February 6th. The market has not opened, but it's trying to go higher because it's been a rough week. I think investors are seeing some opportunity out there. I certainly see opportunity. I've been buying. I'm a dollar cost average guy. And what we're going to do on this channel is we're going to look at stocks, especially the ones that announced this week that look really interesting, like Amazon. We're going to revisit Microsoft. It announced last week, but I think it's worth looking at. And we're going to see, does it set up well on the charts? Daryl is going to handle the technicals. How you doing, Daryl?
Doing wonderful. It's good to be here, Victor. Hello, everyone.
And I'm going to handle the fundamental review, see what the business is all about, try to understand the business qualitatively, where it sits in its industry. Is it strong? Is it weak? Look at its cash flows. Does its cash forecast look really good? Is it priced at a discount or premium based on the value of those cash flows in today's moment? Also look at its profits and value the company based on its earnings per share. And we're going to really look into these stocks holistically. And I think it takes an open mind, especially around Amazon, to understand that company. We're going to get into that in a minute after we kind of open the show here. So the market is going up a little bit. A couple of things that I'll note is Bitcoin is under a lot of pressure. And it is something that I'll ask Daryl if he could take a peek at BTC later after we do the stocks, because this has been a pretty harsh sell-off. I mean, October, we were sitting pretty. If you're an investor in BTC, I am. I've been an investor for a while, so I'm sitting on good gains. But let me tell you, a 45% drawdown on the price, not good. It is not fun. It is fun to see the darn thing go higher, right? I started buying here, and I saw this rise, and I'm like, wow, this is great. And then we saw this nuclear winter, or excuse me, not nuclear winter, crypto winter. Sorry about that. And we look at that drawdown, 83%. Oh man, that was a doozy.
Yeah, it looks like a blip on the screen at this point.
We lived through that, and then it went up higher, and we were like, man, look at that. See, all the naysayers were wrong. And then it had a pretty good sell-off. 73. Holy smokes. Of course, we brushed that off and said, I just kept my coins, by the way. I'm like, whatever. I put small amounts in, something that I was willing to risk, and I'm still up big. But if you look at the recent high to where we're at now, I mean, these sell-offs are getting, believe it or not, more reasonable. Because look at this one, 73%. And then from here to here, that was a doozy, 83%. Holy smoke. So that's one of my requests for Daryl later is take a look at Bitcoin and what do you think is happening? And what are the charts, looking like for Bitcoin? So the heat map, yesterday's trading was pretty darn active. We saw stocks really crash down. I mean, they went down pretty harshly. And then they recovered. They recovered quite a bit. NVIDIA recovered some of its losses. Google recovered some of its deep losses. So I think that was productive. Now, the stock we're going to lead off with is Amazon because, boy, there's a lot of attention on Amazon. There should be. It's a big, big cap. And there's a lot of information to process that was released yesterday. And I am going to go strategic on Amazon because it's important to do that with a business like that. And then we're going to go over Microsoft and we'll see what you guys want to talk about. We have a new member. We have a couple new members. And one of the members just got on, or actually I gave him a Discord code, and his name is, or his handle, I should say, is Miami West. Great to have you as a member. Thanks for joining. And it looks like Wisdom is Truth is rejoining. I appreciate that. If you're a member and you want to see a stock, just pop it in the chat. We'll take a look at it. And if you're not a member, no big deal. Just pay $5 super chat. We'll take a look at your stock. We'll analyze it fundamentally. We'll look at the charts. All right, so let's talk a little Amazon. Amazon announced their earnings. I had a chance to really think it through and kind of assess where Amazon as a business is, how I want to invest in Amazon. So Amazon is investing in their business, and it's investing big amounts. It's wanting to invest $200 billion in CapEx, principally in its data centers, so it could continue to get customers to rent out that compute, to rent out all that cloud infrastructure, and then charge them money. What's good about that business model, AWS is the piece, the business that Amazon has. It's been around for a long time, like 20 years. It has proven to be a very sturdy, hardy business that continues to grow and produce good margins. So the investment is not a problem for me. It's a big investment. So I think that's, as the market weighs that investment, it's a big one. So it's shrinking cash flows. That's something that one must consider. Its margins are expanding, positive, negative, positive. Amazon culturally, they have no problem growing the business, doing what's right for the business, doing what's right to grow their market share, and the stock doesn't behave the way that everybody would want. They have no problem doing that. They've done that from the start. But they're growing what they think is the value of the business down the road. Profit margin of 10.8%. Now, one of the factors that I'm looking at is this is a $716 billion business. They're heading toward becoming a $1 trillion revenue company. Amazing. So if I take that number, divide it into its market cap, you're paying 3 times for the company. If you go sales times 3, you get to roughly their market cap. That's very good. That's a very good ratio for a business that has 50% margins, for a business that has a super dominant e-commerce lead, super dominant, not just dominant. It's like, who can compete with e-commerce against Amazon? The other aspect that, as I process kind of like, what are the things that I like? What are the things that I dislike about Amazon? Amazon, for their e-commerce business, I could put in as a consumer staple stock, because if times get tough, you buy on Amazon. You can get really good deals on Amazon. You can do your shopping on Amazon. I'm going to buy something. A, finding it on Amazon is pretty much automatic. B, I can do my price compares. I have a lot of trust in the Amazon brand, and I buy it. My wife does the same thing. She's a super shopper. She does a great job. And Christmas is her Super Bowl. She buys all the gifts, especially for the little ones. And man, she gets these great deals on Amazon, right? So I think of it as a consumer staple stock for their e-commerce business. And we're entering an era where, or I should say a year, consumer staples aren't that bad of an idea. It's actually a pretty good idea. So I like that about them. So I like their growth, their dominance, their gross margins. I do not like that they're burning so much cash, but they're not burning it just to have a big bonfire and have a rave party. They're investing it in what will be a very hardy business. It's been proven to be a hardy business, AWS. So near term, it's not going to be exciting. Long term, I think this is going to be one of my best money makers. And I want to be a bigger owner of Amazon. So I'm going to be buying shares. This is what I'm focused on down the road. Amazon bringing down their PE ratio to 12.5, and they'll be a $1.2 trillion revenue company. They're not going to be a 12.5 PE ratio company. They'll be a 25 to to 30 PE ratio companies. So really, the stock should double in the next 4 years in my qualitative assessment. And when I value the stock, it values on earnings per share with a discount. It values with a giant premium on free cash flows because they're using all the cash to build out AWS. So for the time being, I'm going to just focus on earnings per share valuations. It's a decision that I'm making. And that's why I do the two valuations. That's exactly why is if cash flows are really showing a value that's like completely detached from where the stock price is. If I look at earnings per share and I understand the business, I understand where the business is going, that's likely a better measure. That's why I'm going to go earnings per share. I'll show my valuations after Daryl shows his screen, and you've got to add your screen to the stream, sir.
It's Friday.
No problem. No problem at all. It is Friday, ahead of the Super Bowl. And let's just have a little fun with the Super Bowl. Let's get a little chatter. Who are you going with? Are you going to take the points? Go with the Patriots, the underdog. I think 4-point. Last time I looked, and I looked like a week ago, I think it's a 4-point point spread. You go with the Patriots taking the points. You think the Patriots are going to keep it super close or win?
So
or are you going to go with those Seahawks?
I'll let you know how big of a football fan I am. I didn't even know who was playing until you just said. So I do enjoy watching it, but it's I got a lot of other things going on right now.
I hear you. And FYI, last thing on the Super Bowl, I may be hosting family for the Super Bowl. We got together at my mother-in-law's last year. We had a really cool time and we all barbecued. And I thought we were going to do that again, but the family pulled an audible and I might be hosting, so I might be a little busy. Anyway, back to you.
All right. So I've been looking at the Amazon chart in the aftermarket. They did drop from their close yesterday around 199 or so. They dropped in the aftermarket down to around 205. They're currently sitting at around 202 at the moment. So I'm going to go to a 1-year chart because yesterday we were asked if this was a good entry point, and I think it is. So yesterday they came down and tested and closed at the 200-day moving average. Let me turn on my mouse highlighter there. So they did close right at the 200-day, and I have support at 209 down to 199. So they're closer to the second level of support, and I think this is pretty good support. It's not quite down to the tariff announcement lows that we saw, but it is below their earnings from May the 12th. So I'm gonna buy a few shares today. I think they might still trade downwards. There's the possibility. We have an RSI that is currently below the 40 line. That doesn't happen too terribly often. It did happen in February and March, and in the tariff announcements, they dropped below 40, but they tend to hold that 40 line pretty well. So we'll have to see if this continues to lose strength. But I'm going to pick up a few shares today because I think this is a really good support area. I don't see the tariff lows coming back into play here. The money flow is neutral. We do see distribution over the past, probably since about the 3rd of September. But I like Amazon. I think they're a great company. I think they, despite their CapEx that It's just investors have never seen numbers like that. We've never heard of a company spending $200 billion on some project. I don't think our space projects cost that much. So it's a big number and it's freaking people out. But I want to take advantage of people freaking out when it gets to levels at this point and pick up some more shares.
All right. So let's take a look at the valuation for Amazon. And I like your comment on we've never seen numbers like that except for the space program. Yeah. And, we're heading into this whole AI era. And I could tell you, I've been having a lot of success with Gemini. And my 21-year-old son, he's been like hitting me over the head with ChatGPT for like 2 years, maybe going on 3. FYI, he's 21, right? So in 2017, he started investing in Bitcoin, started mining for Bitcoin. So he's kind of a little bit of he sees things that are interesting and then he abandons them, which is a young person. So he got me into Bitcoin. I could thank him for that gain. And then he, if I would have listened to him 2-3 years ago, maybe I'd be further ahead. So anyway, so I've been using Gemini for the last year solid, but more recently I've really have begun to use it far more in more advanced ways. And I can just tell you it's changing my game like very, very fundamentally. Having said that, I think the smart people at Amazon, at Google, at Microsoft, at all these big places, this is why they're spending, in the case of Amazon, $200 billion is they see that this thing is going to change. It's going to change a lot of industries. I think it's going to change stock investing. And I think the individual stock investor using AI is going to win. Okay. But that's an aside. Let's talk about Amazon from a value perspective. So we know their cash flows. They're to say they're spending like drunken sailors. I don't think sailors have billions of dollars, so I can't use that analogy. So what I would say is they're spending like they're on a mission to Mars or something. But they are on a mission to capture this market that is going to host AI workloads. It's going to host the refresh of technology, software, workloads that are going to be on AWS for the next 10 years. So that's a smart bet. That's a real smart bet. The e-commerce business, we know that e-commerce is going to be dominant. I don't see anybody touching Amazon for the next 10 years. And they are somewhat betting the business on AWS. They have these other businesses, like their streaming business is good. Their advertising is going to continue to grow well. So I'm going to continue to look at free cash flows, but my investing decisions will be based on earnings per share. And the earnings per share gives me a 17% discount. And that's with numbers that are, I would say, held back with all the current spending. Something that isn't highlighted is Amazon's got over 1 million robots in their operations. They spent the money to do that. Amazon's has 2-hour shipping in a lot of metropolitan areas. They invested big in these warehouses, these key distribution centers. They were spending money on that. So that's spent and they figured it out. So I think the profits are going to get much better going forward. And I think forward days are going to be better. So it's a strategic investment. It's going to be a long-term investment. And just to polish things off, when I use my app, it's still in beta, so I haven't released it to anybody, but it's giving me accurate numbers. It's in that range, and I hope to release this in the future. I plan to release it. I just hope, but I just want to make sure that it's accurate and it's useful. It's simple, easy, and stay tuned on that. So that's my plan on Amazon. We'll see how it trades today. I think that it's held by a lot of smart investors, and especially some long-term investors that see that if you look at the big picture, Amazon's going to be it is currently a big force in the business world, and it just continues to gain more power, and it will be successful in the long run. So that is Amazon. We are going to move on to Microsoft. I put Dave on the list. That was a request from Mike. Mike's going with the Seahawks. Looks like Shadow Guy is going to support the Seahawks. So we got two Seahawks. Haven't seen anybody come up with a vote for the Patriots. Reddit. Reddit came up. So I put that on the list. And I think it was Peyton that requested Reddit. Got it on the list. All right. So let's take a look at Microsoft. So Microsoft announced earnings last week. It was not well received by the market. The market was like, whoa, we don't like the CapEx you're spending. I think the software universe began to get just destroyed. Not just Microsoft, like just about every software business is down 10 to 15, 20% from last week's stock prices. It just has been really, really extreme. Is it overdone? Is Microsoft sitting there right in front of our eyes as a really good opportunity? Let's examine that, because Microsoft is a very important business. Over the 1 year, not a pretty picture. Over the 5 year, it's a productive stock. Over the long term, right? It's an awesome stock. As we look at this stock, look at these sell-offs. It's had a pretty good sell-off there. We had that sell-off. Everybody sold off in 22. We'll see if everybody sells off in 26. We got a dividend-paying stock here. Forward P of 22, current PE ratio of 24.6. Okay. Analysts think it's highly discounted. That's a pretty good discount there, 53%. Looks good. It's a big business, $305 billion, growing at 16%. That's very, very impressive. That's a huge growth rate. These guys are growing upwards of $100 billion per year. Okay, that's big. So as we look at their profitability and their free cash flows, free cash is still very good for Microsoft, by the way. They have a very good margin business. Their margins are higher than Amazon, 68.5. Amazon was at 50. Their profit margin 4 times Amazon at 39%. These are fabulous numbers. For a business this big, tremendous numbers. So these numbers are looking good, looking real good. As we look at the forecast, what's Microsoft going to do going forward? Well, according to a lot of analysts, we've got a lot of analysts putting in their research. They have a fiscal year that ends June 30th to be exact, June 30th, 2026. So we're closing in on the end of this year, I guess, because we're already in February. And it's expected they're going to grow at 18.7%, 15, 16, 12, 14. Those are good numbers. For a big business, very good numbers. Earnings per share is going to keep growing. P ratio, how could Microsoft be in the teens? What's wrong with this stock market? It's being irrational on Microsoft, high level. Let me kick it over to Daryl, see if he could explain why the market is hating Microsoft so much.
I don't know if I can necessarily explain that other than those CapEx numbers, but one of the reasons I wanted to look at this chart because I was asked about this in a previous live stream is do I look at gaps on the chart? And here's one that is getting filled. So whenever we were up at these numbers, I kept watching this gap here. And look where we are today. It has filled that gap. So we're back down to levels that we saw before this gap up on May the 1st. So I don't obsess about gap ups or gap downs. I don't obsess about them, but I do keep an eye on them. And the reason I do that is other traders keep an eye on them. So it tells me when I'm watching price action, I know that there are thousands of traders that are watching this number right here. So that's why I pay attention to those. I don't obsess about them, but I do watch them. And this is a beautiful example of how gaps can get filled.
You there, Daryl?
Yes, I'm here.
Okay, perfect. And you're done there?
Yeah, I'm done.
All right, perfect.
I just wanted to talk about that gap.
Okay. All right. So Microsoft. I have a 20% blended discount, and that discount I think is a good discount on a great business. If I look at their EPS, it's discounted by 33%. Microsoft's a buy. You just Microsoft's one of one. It's going to be a business that's going to do great over the next 10 years. Okay. And there's certain times, if I look at the charts, there's certain times when you can accumulate Microsoft. I think it's one of those times now. So I'm thinking Microsoft's a buy right now. It's looking really good. So I think the sell off, the market is reacting. I like what you said earlier, which is the market's never seen investment into data center like this. It's just never seen it. I get it. But we're in 2026, right? It seems like the inflation numbers have been really high for a couple of years. And I know certain things, like as I consume things like out in, life, cars as an example. Cars, I mean, you get up to $100,000 like very easily in a car now, a new car. And it's like, I don't know. I know 20 years ago, $100,000 car was like a really expensive car. Now it's like, yeah, there's all kinds of cars priced at $100,000. So back to Microsoft and how they're spending a lot of money, Google's spending a lot of money, and Amazon's spending a lot of money. Yeah, they are. But guess what? Everything's more expensive. These data centers are more expensive. The GPUs, I mean, geez, I think NVIDIA charges like $50,000, $60,000 per GPU. It's a lot of dough. And I think it's a safe bet. I ran the numbers through the app, and the app is coming in range. 9.3 on cash, 33. Perfect. Good job, application. I'm testing it, seeing where it doesn't agree with my valuation that I know. I'm double checking all my figures here and then checking the app. So the app's performing okay to this point. All right. So that is Microsoft. We're going to open in 2 minutes. So we're going to move on. I think let's take a look at Bitcoin, because that never closes, right? Bitcoin's always open for business. It hasn't closed since it was introduced to the world way back when by what is, I think, an anonymous guy, Satoshi. So this is not, I mean, overall, 5 years, 69%. That's a pretty good chart, because it shows where we've been and where we're at. So that's a decent rate of appreciation, but it's not good enough if I'm taking a big chance on a speculation, which is what Bitcoin is. Big speculation that, hey, Bitcoin's going to be something. It's going to be an investment that people make going long term. And at times when, it was going up, it was cranking up from coming out of the 2022 era up to the high of 2025. Yeah, it certainly felt that way. It was up 639%. But now that we're seeing a big drawdown, it's I think a lot of investors are spooked. I can understand why. So I wanted to turn it over to the person that knows charts really well, see if he's seen particular things that he could point out, if anything, just to help me understand the situation better.
I have a 5 years worth of data here, and I put this auto support resistance line. This isn't set perfectly, but it looks like it matches quite a few times where it found resistance and then oscillated above and below it a little bit. And we had the run that started in 2024 and took us up to 126. And now we're back on the way back down to this line. We're trading right there at the moment. So let me zoom back in now that you know why I have that line there. And we are getting oversold in the RSI. Let's go back to 5 years. This doesn't happen very often. We were oversold in 2022. We were oversold in August of 2023. Looks like we got oversold in February of 2025.
FYI, those were, if you bought during those points,
Yep.
you would have made a lot of money.
Yep. So if we come back out to a year, the PPO is in negative territory. Money flows in negative territory as well. I don't have accumulation distribution on this one. I'll have to add it at some point. So it looks like we might be at a little bit of support. I see Bitcoin is up today and trading above the line today. We do have a 200 that's decreasing, a 50-day that's decreasing, 21, and it's been trading under its 5-day moving average as well. I don't know how low it can go. I was looking at some other support levels down below here. Looks like we found support at least 3 times in 2024, right around 55K. And then we found some resistance points around 47K. So that would be my best guess over the short to medium term, especially if it doesn't hold this level that we're currently trading at. And I know that there's a lot of leverage with Bitcoin. People are having to unwind that leverage, and that drives the price lower. So I don't know how much leverage is there and how much we still have to go. But that's probably what's been causing most of this decline here recently.
Yeah, wild times. And MicroStrategy / strategy, they really bet big on crypto and Bitcoin. They started issuing out debt to have a Bitcoin treasury. And when Bitcoin was going up, boy, strategy was really looking like a phenomenal stock. And now it's just getting barbecued. It's not looking good at all. It's really risky to be leveraged into a position because it's times like this that make you realize leverage is not good. All right, stock market is open. It looks like, hey, there's buyers coming in and buying stocks. The S&P is up nicely. NASDAQ is up. The VIX is coming down. That's good to see. We look at the heat map. Let's refresh this guy. Look at that green. Whew. Green, green. AMD, green. Apple, just quietly continuing to go higher. Looks like there's a lot of green in software. So the semiconductor space, no big surprise. Hey, Amazon's going to spend 200 billion and Microsoft's going to spend 100 and some odd billion and Google's going to spend 100 some odd. That's a lot of billions, man. I think those three companies in 2026 are going to spend $500 billion on data center or on CapEx. It's not all data center, but that's a lot of CapEx. So we'll see how it goes. So that's what's happening out there. Any other things I'll point out? So Robinhood had been getting destroyed. I don't know which one. I think it's this one here, but it's not going to show it to me. There it is. 10%. All right, good. I started selling some of my Robinhood 2 months ago. I took a pretty big position. It was either 220 or 240, and I sold like 50,000. And I feel like I dodged a little bit of a bullet because in the last 30 days, Robinhood's down 30%. So that's why I wanted to do it. It's a riskier stock. It's not Google. It's not this big business with diversified revenue streams. It's a younger business. I love the stock. I love the company, but I got to measure my risk. All right. So we're going to flip over to Dave. Mike wanted to talk about Dave. It's worth talking. It's up 14.8%. It pre-announced their earnings. Said, hey, everybody, we're going to be doing better than expected. We just wanted you to know that. We'll tell you more on March 2nd. Stock's roaring higher. Hoo-hoo. Now, this stock is still kind of just trading in a range, and it's not even close to its 52-week high. I mean, if you measure with these lows, yeah, but if you go back to May, from May to now, it's not doing all that much, right? So interesting to see the charts on this one when I hand it over to Daryl. I think it's a really good business that has ideas to provide financial services in a more modern way, and customers are buying it up. Good growth. So we've got 57% growth in 2025. When I slice the quarters open, they're saying they're going to do better. Well, market likes that news. So if they keep growing at these rates, this stock's going to be just fine. And look at this profitability. They're really cranking up the profit. That profit looks fantastic. So gross margins, beautiful number. For a young business like this, a small business, 71.5. That means that number is probably going to get a little bigger as they establish scale. They're profitable. Young business, it's look good. Free cash flow margin, 50%. Jeez, man. Those numbers are make-believe. Maybe I'm in Disneyland and Fantasyland investing with Mickey Mouse. Nope, I'm not. This is Dave. All right. So I'm going to look at Dave and their valuation after I turn it over to Daryl to look at Dave, so I can take a look at my numbers and make sure that they're ready for prime time.
Okay, so we've looked at this one before, and we put these periods where they pretty much just trade sideways inside of a box. Then they have a breakout, consolidate, breakout, and then consolidate. So it's been a couple of weeks maybe since we've looked at this one. So I'm going to adjust this box ever so slightly, because what I see is I'm going to jump into a year so we can see price action a little better. So they're trading below that box, which has levels that it's tested several times. Then they fell out of the box and now they're moving back up. We had a 50-day crossover to the downside, the 200-day, which is increasing. I probably should change the 21-day simple to an exponential just so we can stay consistent on our charts. Okay, so it looks like they're testing at least the high of the day, and within 10 minutes of opening trading, we're right at that 21-day moving average. I am a bit concerned about the 50-day crossing to the downside over the 200. Just so this may be a short-term play. We'll have to see. The RSI was down at the 30 level. We have gotten back above 40. I like to see them hold that 40 line. We still have a sell signal on this one, so we have not got a buy signal on the PPO just yet, but it looks like within a day or two it would cross over and become a buy. It's been in distribution mode pretty heavily since the beginning of January. It was steadily being accumulated over most of last year. The money flow is still negative at the moment. So we've saved this. I'm going to go and take a look at the weekly. So we're getting a little bump up in the RSI on the weekly view as well. It never quite got down to the 40 line. We still have a sell signal on the weekly, and money flow is negative on the weekly as well. So you can see when they have these escalation in prices, we do see a lot of accumulation step in. So here was another one. And we're sitting pretty much over the last, since May of last year, we're sitting at this accumulation level right here on the weekly view. So I don't know, this could be a short-term play today. We'll have to see if the market is able to sustain higher prices on this one, given the preliminary results that they issued.
Well, for sure, the results build enthusiasm and confidence in the stock, right? So that's good. When I look at Dave, I updated this. Actually, should change the date because I updated some numbers. It's just that the numbers are really good. I think the market is like, well, are they going to sustain these numbers? That's the question it's asking itself. For them to pre-announce, it looks like their app is working. Their business model is working. It's working in 2026. I'm using a higher discount rate since it's a smaller business. And even with that, the cash flows are solid, 70% discount. The earnings per share value is solid. And my app is saying, yeah, it's pretty much in agreement on both. So Dave is a stock that I've started to nibble on, but I think I'm going to have to kick it up and make it not maybe a main entree on the menu, but it's going to be a stock that I'm going to invest in. I like what I'm seeing. I like the business a lot. I think it makes a lot of sense. I've made a lot of money on Robinhood. I was making a lot of money on Coinbase. Back in the day, I was making a lot of money on Coinbase. It's really taken a big haircut now, but all kidding aside, this business is looking good to me. I'm gonna buy some shares of Dave going forward. So Mike, good day for Dave. Let's see how it goes. All right, so let's take a peek here. Genetic Smite. I think Genetic Smite might be the guy on top of the list. He's the one that can explain what the heck tungsten is. I know that it's like a very durable material. Companies use it and so forth. Let me hit refresh here. I thought I had an automatic refresh. It's not working for me. I'm going to have to check on that. All right, so let's hit this guy here. All right, so it looks like Genetic Smite picked ALM. They do tungsten materials. Daryl in second place. Brian, CCOI. Alibaba hanging in there. Google's hanging in there. I mean, it's a down month. I mean, this thing's going to reset itself. We'll see how it goes from here. All right. So, yeah, IREN. I put IREN on the list because, wow, that moved fast. But maybe it's picking up some investors today. Let's take a look at it. All right. So we talked about BTC. Somebody wants to look at CNC. You know, you can't drive past a 4-car collision without taking a look. All kidding aside, we'll look at CNC. I know that it's been rough for Molina, and I think that's why CNC is selling off. All right, cool. All right, we're moving on to Reddit. What's going on in the Reddit stock universe? It's up a little bit. I haven't even looked at their earnings. It's just been too much information coming out at me at once. And I have not had a chance to look at their earnings. So looks like the earnings have been good. The software apocalypse. Ooh. What's it? What does that have to do with Reddit? So these guys are highly discounted. My discount isn't quite as high. I'll show that to you after Daryl takes a look at the charts. But look at that. Wow, the 1 year. Now, it's when you buy it, right? If you buy it here, you're doing fine. Now it's in the red. Interesting. Now, I've been looking at Reddit, and if I did not own so much communication services, that's their sector. 24% of my portfolio is here. Alphabet, Meta, Reddit. If I did not own that much, I'd be all over Reddit stock. I'd be buying it. So I'll update my valuation. I'm going to kick it over to Daryl, take a look at the charts, and tell us what he thinks about Reddit.
So they're trading down to what I have as the support line that goes back to the 2nd of July. It looks like the 2 past trading days are trading just slightly below that, and today we'll have to see what the action is, but looks like it's finding a little bit of support at that level. We do have a 50-day that is starting to roll over. We have a 21-day EMA that is rolling over, looking to get down to cross below the 200-day, which is increasing. They are currently oversold with an RSI of 20. It's pretty low. I go back, they're only a couple-year-old company. Yeah, they were oversold like this one time back in March of 2025. So we'll go back to a year. They've been on a sell signal since the 14th of January. And since that point, they are down 40%. So listening to that signal would have saved you about a 40% drawdown. We are in a pretty steady distribution. Money flow is currently negative. They had been outperforming the S&P 500 a few times during the past year, but they are underperforming by 40% today. They're underperforming the communications sector by 39%, are underperforming their industry group by 48, while that industry group is outperforming by 17. So on a relative basis, it has not been performing very well over the last couple of months, at least.
Thank you, Daryl. So I really like the Reddit business because I really like Meta. I like businesses that have very high margins. Reddit has 91% gross margins. They have very high free cash flow generation. They're a younger business, but they're not a new business, right? They've been around for a while. So we know that they have a following of users that looks pretty darn good. So I am in the middle of updating my numbers. Let me see if I'm going to get my new numbers here. Looks like stock analysis has not updated those numbers. So give me a second here. I'm going to go to the Reddit website and see if I can get a couple numbers that I need to update this information. All right, here it is. So okay. So daily active users increased by 19%. Revenue grew by 70% year over year for the fourth quarter. That's great growth. That's a pretty good number, right? That's a big number. Okay. Net income grew nicely. Okay. So 70% growth. Gross margins, 91%, folks. 92%, really. That's great. That means their cost of operating Reddit isn't very high. Free cash flow. And I forecasted this quite well. I was looking at my forecast from a previous quarter, so that's good. All right, total for the year, growing at 69%. That's great growth. 91% gross margins. Free cash flow of $6.84. Earnings per share at $2.84. These are fantastic results. All right. So I had the cash flow numbers there. I have a 48 on the PE. This is a 70% growing company, 69% for the full, was it 69% for the full year? So it's just a really, really good business. Now the growth rate, I'm going to look at their forecast on another screen here. What is that growth rate there? Yeah, that number. Yeah, that number should be. So I always pause when I'm using big growth numbers, right? Because I want to make sure I'm being conservative. 29% discount on a really important business, special business. I'm going to kick this down a notch so that long-term growth. Okay, that's better. So short-term growth, I'm going to be more optimistic. They're growing at 70%. Their cash flow has been somewhat doubling, like year over year. That's not going to happen over and over again. So I think this is realistic. And then the terminal value growing at 4%. I'm using a higher discount rate than I would use for Meta. Okay, I'm good with that. So 30% discount on a special business. Now, investors are not diving in head first. Is it a risk off day again today? Let's take a look. I think Reddit is probably taking its cues from Meta. Look at Google's down again. Amazon's down harshly. And there's a lot of green on the screen. So I think Reddit's a good one. If I did not own so much of these guys, I would be buying Reddit shares. And that's where I'm at with Reddit. Thanks for asking about Reddit. So we're going to look at two stocks, IREN and then CNC. Let me check the chat just to make sure we got everything covered. The earnings were super impressive. It's hard to find businesses that are growing like Reddit. And you look at what like Palantir has put down, you know, impressive numbers. Reddit has Palantir-like numbers. Palantir is growing at these rates. Palantir isn't as profitable as Reddit. So I really like the business. Maybe I should sell some of my Meta, sell some of my Google Alphabet, and buy more Reddit. Maybe. That might be something that I'm going to kick around on the weekend, maybe buy some shares, maybe go dollar for dollar, sell some Meta, but immediately buy some Reddit. Yeah, maybe that's an idea worth considering. Michael Anthony, good to see you. All right, so let's take a peek at, and Fortinet was trading higher last night. What happened, Fortinet? Everything's software right now. I am like shell shocked. Okay. I'm just, my software stocks are getting smashed so bad that I'm like, okay, got to pause all investment into software for now. I'm holding my shares, but I got to figure this thing out, or the market's got to commit one way or the, I think it already committed. It's going to sell off software stocks. And we'll see if I start investing in the future, if I have to trim back some of those positions. But for now, let's talk about IREN. The year to date, look at this. It flew up, got too close to the sun, and now it's kind of really pulled back. In the 5 days, 35%. It announced earnings. Oh, wow. Okay. Shit, man. So announced earnings. Investors are scared. Investors are scared of that data center, and IREN is getting taken down as a result. These guys operate in Australia. I don't think this is correct. Capital markets, financials. So IREN operates as a vertically integrated data center business. I think because at one time maybe they were doing Bitcoin and they were classified as a Bitcoin miner. I think of them as like a neo cloud business, like a CoreWeave. And Nebius. Nebius is out there. What is Nebius doing? Now, when it comes to neo clouds, wow, Nebius is doing well today. Look at that. Nice. Still doing good for the 1 year. Now, for the last, let's call it since September, that would be about 5 months. Been going sideways, but it's still positive. And then CoreWeave is in here. CoreWeave is up big. Big recovery day for CoreWeave. Now, these guys IPO'd less than a year ago. So this is their IPO. They ran up and overall have been coming down. Year to date looks good. The 1 month looks okay. All right, big recovery day for the neo clouds. Look at NVIDIA fly up. Whew. All that money that Amazon and Google, Microsoft are going to be sending. They're going to be sending big trucks full of gold over to NVIDIA and Broadcom. All right, so that's what's going on there. Industrials picking up a nice bid. Energy is trading higher. Gold picking up a bid. All right, so that's what's going on there. Let's take a look at CNC. Centene is down 6%. And I think it was on the news. So Centene sees 2026 profit above estimates. Well, okay, that's good. They announced that. I think they had to because I think Molina had a big report. I think they pre-announced and they said, hey, things are going to be rough in 26. And it took this stock down. Yeah, healthcare insurance stocks have been under pressure. We'll see if that changes. Now, let me get something straight. Did the Affordable Care Act subsidies get reapproved?
Not yet.
Not yet.
Not to my knowledge.
All right. Let's get Gemini in the game here. I could have sworn that they were extended. So as of early 2026, the Enhanced Affordable Care Act subsidies have officially expired, though there is significant ongoing legislative activity to potentially bring them back. Here is the current breakdown of the situation. So these expired. And I guess it's getting talked about. Okay. Well, so here's what's confusing me. So it's important to note that only the enhanced portion expired. The original ACA subsidies, premium tax credits, are still in effect.
Yeah, so during the Biden era, they did enhance the subsidies and we got additional credits, but those have expired.
Got it. So there's two levels.
Yep.
Got it. Okay. Okay. So there is a subsidy. It's just back to the original one and not the enhanced one is gone. Okay.
Right.
All right. Because I had heard the confusion was what I just explained is okay. I had heard that the subsidies are still around, which I guess you could say the original ones were, but the enhanced ones went away and they're talking about maybe bringing something back. All right. Good question from Paul Fallsgrave. Do either of you watch the trades made by members of Congress? I don't. How about you, Daryl?
No, I don't either.
Yeah, I think it could be more confusing or distracting. I get that they get insider information, but I get the information after the trade was made, after the information was disclosed. So it's like, great. Now, I think the one that was making a lot of money was Nancy Pelosi. Is she still in office?
I don't think she's running again when her term expires this time.
So she was making a lot of money, and I think she was heavily watched, I guess. And some others have been watched because members of Congress, and I don't know about senators, maybe they do as well. They pretty much have a get out of jail card universally on insider trading. If they, let's say they are part of a subcommittee and there's some type of application where it shows that, oh, this one business is going to do something that's going to be really good, they can buy the stock with that information and not get in trouble. If I did that, I'd be in a lot of trouble. And they would probably heavy fines and all that good stuff. And and it is illegal. So, but I think, not a political channel here. I don't think they should be able to be allowed to do that. That's just an opinion. I don't think it's fair if they can do it, but we can't. All right, back to, I think we covered the list. Nice. All right, so we covered the list. Let's take a look at the heat map. Are we going to ride off into the sunset this week? Let our hair down? Well, not for me because I own this stock, and this stock. But I am going to buy some more Amazon today. Uber is down. So looks like some stocks are working today, working quite well. Really a lot of green across the board. And these small caps are probably working nicely. All right. So I know there's been a lot of earnings stuff, but what's been going on with your channel?
Okay, let me share a screen here. So I did put out an earnings preview on Google and Amazon before their earnings. And I saw a lot of questions about, I don't understand how a company beats earnings and they're down. Well, on my companies that I have in my portfolio, we have an 83% beat rate on revenue. We have an 80% beat rate on earnings, and only 33% are initially higher. So this is one of those quarters where companies are not being rewarded for beating their earnings, and Reddit is probably no exception. So
I would say that it starts with, we've had 3 great years. So maybe their perception that stock prices are expensive is part of that.
Yep, I agree with you.
Yeah. So,
and then I have let's see, 7 that are reporting next week. I'll at least be putting out shorts on all of these. I don't really see any that are so interesting that I would do a detailed video, but a couple things that I see. Real estate is doing really well right now. WPC hit a 52-week high. ADC hit a 52-week high yesterday. ADC is up today. Let me see. WPC is up today. Realty Income is up today. Triple N Read is up today. So they're all doing really well and all at either 52-week highs or near all-time highs. ADC is also in accumulation, so that's better than an uptrend. Uptrends are good. Accumulation means that institutional buyers are stepping in. So I'm looking for good things from ADC. Lyft is in distribution. That's worse than a downtrend. That means institutional investors are moving out. Q2 is a software company. I'm glad it's a very small position. ETR is uptrending. That's an utility company that has done incredibly well over the last 2 years. And CART is in a painful downtrend at the moment. So we'll see what goes on with those. I'll at least put shorts out on these. I'll tell you what the implied move is. I'll share these trends in the short. I'll tell you what the relative strength is going in. So those are only a minute long, but they give you a lot of information in that 1 minute.
all right. Thank you, sir. And my channel, a couple things to point at. So I'm going to be creating a video on Amazon and I'm probably going to create one on Reddit today and kick those out to members. So look for that. And I'm also going to update the website a little bit more this weekend. And I know right now the website's pretty limited. It's really got good super investor data in there. But I'm thinking what could be the next portion of information I can start distributing on the website. The app, the valuation app is there. It's coming. I'm testing it. I'm continue to make it better. And it's going to, the website eventually will have a registration process. Everybody has to be registered minimum to view any of the tools. And then paid members will have different access points. And so that's coming, but I don't know if that's 2 weeks away or 4 or 6 weeks away. We'll see how quickly or slowly I'm able to do that. But for now, these stocks are really changing quickly. It's a time when, the market is it's doing its thing. If you look at the last 5 years, the market has been so many places, right? You've got, I guess the pandemic is out of our 5-year view. Oh man. I mean, I still go back to the pandemic and go, I can't believe this is happening. And the stock market got crushed and then it came back. It was like, wow. So since then, we had a pandemic 6 years ago. We had a kind of a light recession in 22. We had high oil prices. It's what the market does. But look at this. I think the 1 year, I was looking at the chart going, man, it still looks pretty damn good, even though there's volatility in sectors. So picking the right sectors is the key. And being able to weather this change in market direction, let's remove the emotion out of the process and do our homework and replace it with facts, strategy, and so forth. All right. So Bo has made an appearance and sponsored a super chat. Hey, Daryl, I like your video on HESM. How do you like them as a long-term hold? Do you see them as a yield trap?
Okay. I do not see them as a yield trap.
So
let me share my screen. We can look at the
absolutely
chart. This is a fairly sizable holding of mine. They did have a pretty big drop in September. They did get a downgrade from an analyst a few days before this big drop. So I did some trimming of shares. And then when it started stabilizing, I picked all of those shares back up. This was basically on just Chevron, who bought Hess. Hess Midstream is still an independent company. It's very confusing. But Chevron reduced the rig count in the Balkan region from 4 to 3. So I went back, if you watched the video, you already know this, but I went back and did some analysis at other points in their history when they either increased or decreased the rig count. How did it affect pricing? And I found out it wasn't too terribly significant overall. So I've been picking up shares. It is a pretty sizable position of mine. They have a 200-day that is bottomed out and still increasing. They have a 21-day that's increasing, a 50-day that's decreasing. The RSI is sitting at 60. They're on a buy signal in positive territory. This company pays a dividend of 8.61 or 62%. It just changed right before my very eyes. And they've reduced because of they don't have to spend as much on the project, one project that they were investing in. They reduced that project capex. They're going to continue building on their dividend. So I don't think it's a yield trap at all. Do I think it's a long-term hold? Let's look at them from inception to today. So this is going all the way back to 2017. We had the pandemic, and they fell out of this trend channel. And if you had a pool, you could take all the water out and fill it with oil, and oil companies would pay you to store their oil. And then that recovered quickly, and they got back within the channel, and they're trading just below the midpoint. So this is what, 8 years, 9 years worth of data, and they're performing very well on that trend channel. So I don't, I have them as a long-term hold, and they pay a great dividend.
Okay, so Hess Midstream, I've got, and I'm right in the middle of it. So was
Let
updating.
me share one other thing, because I'm asking about my site. On YouTube, it's at Investing Portfolio Pathway. That's the handle, or you can scan this QR code and it'll take you right there.
Okay, perfect. All right. So this guy here hadn't updated since September. So trailing 12 months of cash flow.
They're asking me about a good entry point too. I see at least 2 times since this big sell-off where they've touched the 50-day. So there and here, they cross down below it here.
Sorry, I took the screen away from you.
That's all right. I'm okay. Guess I do need it. I'm sorry.
Now you're back. Now you're back. No, go
I
ahead.
thought I could explain it. So anytime it hits the 50-day, it looks like a pretty good buy. That's currently at around $33. They're trading at 35. So I think the 50-day is pretty good entry point. Even the 20-day isn't horrible. They were trading at the 21-day just 3 or 4 days ago. Now, if we look at this one on the weekly view, they've been on a buy since the 1st of December, and they are above 50 on the RSI.
Okay, so give me a second here.
While you're doing that, let me go and show you guys. I do a weekly review of holdings that I find interesting in my portfolio. So let me go down to that, because one is at a good entry point right now if you're so inclined. That is ARCC. So their book value got downgraded to $19.94. So I do need to adjust this by about 6 cents. But this is a great one to buy if you want the income. This is a 9.94% yield. And if you want a good entry price, anytime it's below the book price to book of their, wow, yeah, I'm getting tongue tied here. $19.94. That's their book value per share. If you can get it below that price, you're getting a good entry spot. They've had some negative news right here because of credit worthiness. I explained this in my video last weekend. And then this week was all related to Blackstone. They had to reduce the basically the book value of their company because of 6 companies that they had loaned money to that were in distress. So they did their mark-to-market valuation, and their price dropped 19%. Jamie Dimon said, if you have one cockroach, you probably have more cockroaches. So it basically affected all of the BDCs, although ARCC didn't report anything like that in their quarterly report that they just released. So they're giving you a gift right now by getting it under their book value, which is $19.94 at the moment.
Okay. So Jamie Dimon, is he going to start like an extermination business or something? Is
He
that what
might.
he might
He
be
might.
socializing what he does in his retirement? So I had to like search for the numbers because the stock analysis didn't have a lot of data on Hess Midstream, but so Hess Midstream is they own the pipeline, so it's going to be more stable. It's just not highly discounted. They do very good cash flows. If they just grow those cash flows by a reasonable amount, I think the high oil price is going to drive more activity. And then long term, we need energy. I think on earnings per share, it's fairly priced. This is kind of doing it by hand. And when I use my app, the app shows actually a really high discount on cash flow, and I have a variance on my earnings per share value. So I'm going to look into that, see if I'm finding just a temporary difference between the app and doing it by hand. But that's where I'm at. I think it's I don't think it could go up a whole lot, but
No.
the dividend is where the money's at. Man, that's a good chart. If you've been into Hess for a long time, I wouldn't have any complaints.
I've been in for at least a couple of years. I'm going to pull open my worksheet and see when I first entered.
And, we all invest based on what we want. Like some investors want income, and I get that. And how do you get that income? There's different ways of getting it. I'm not a big dividend investor guy. I think and that's just the way I operate. Is dividends are a plus, but not the basis of my decision.
Yeah, I've been in since June of 2024. So I was originally in Energy Transfer. No, it wasn't that one. It was another one. And they issued the K1s. And I don't mind K1s. My tax program handles K1s okay without any problem. But one of the things I didn't like is K1s don't get issued until almost the end of March or right before taxes are due. So I was having to do all of my taxes and then wait until April 7th or so when I would get my last K1 to wrap them up and get them submitted. Hess Midstream is a pipeline, so everybody thinks they issue a K1. They do not. They issue a 1099 just like any other company that pays dividends. So I moved out of the other one and moved into this one just because it's keeps me from having to artificially delay my taxes until the middle of April.
Yeah, tax season coming.
Yeah.
All right, so let's go quickly through a couple of stocks and then we'll end the show. Mike is in Ares Capital, good dividend payer, almost 10%. Care Trust has been a really good read. I've been in this one for a while, so I'm glad. And it pays. Again, I don't invest because of the dividend, but I really like their business. I like their business. I like exactly what they're doing. I think the big causal factors help them, and that's been a good one. Ricardo, is Colgate a good long-term investment? Short answer is no. What are we after, right? Like it starts with, what is the investor after? Do you want a decent dividend with a stock that can go up a little bit? Colgate's your stock. But that's not enough. It's, I started buying into this here So obviously, okay, great. It did everything I thought it was going to do, but it did it like almost, very quickly. And there's not a lot of meat left on the bone, excuse me. And I like other stocks more than Colgate-Palmolive. I don't think there's enough discount. There's not enough left there. So I would actually turn my attention to other stocks. I actually went and I updated my classification of Colgate. I had it as, a stock that I own. I don't own a ton of it, so I was buying more, but I've changed it. Just a hold stock. It's 2% discount. It's just not enough. It's done well. Great. Okay. But it's on time to move on to others that look far better. And it's been really doing well because investors are moving out of some positions. Like today, they're moving out of Google, Meta, and Amazon, and they're landing in safer places. A lot of them are. And that's why Colgate's really doing well. All right. Good job, Mike. It's excellent. Yeah, I'm not a big beverage guy. Pep and Coca-Cola, I never liked investing in those. I know that Celsius looked really good, but that ship may have sailed. We looked at that one 2-3 months ago. It looked great. The growth rate looked really, really good. All right, guys. Well, let's end it there. Looks like a lot of green on the screen. NVIDIA. Wow, man, look at that. And the supporting cast for semiconductors doing great. Hardware is doing great. Industrials are doing great. Guess all the construction for those data centers is going to drive some demand for all these companies. Energy's rolling up again. That's good. And then the pharma complex looks good. There's a lot of green out there. Looks like, let's see if we hang on to those gains. I was sharing with Daryl that, before the stream started, I hope it's not one of those head fakes where the market goes up and then it fades and we end up in the red. I hope it's not that, but we'll see. All right. So it looks like a couple more comments here. Any insights on RMBS? Rambus manufactures and sells semiconductor products in the United States, South Korea, Singapore, internationally. Oh, memory. Well, memory is super hot. What's been going on with this stock? 49%. Well, memory has been just killing it. There's a scarcity in memory. And I don't know where Rambus sits. I don't know that I have a valuation for Rambus. Analysts think it's fairly priced. And they own a bunch of memory patents. So that's probably really driving up their value. They're up 49.5%. Year to date, they're up 10%. So this thing's been a really good idea. And taking a look at their forecast here. The growth is good. It's just not amazing, right? Good growth. Good growth in profits. Yeah, looks good. PE ratio. The PE ratio does look a little expensive. It's a memory company. If growth goes away, it should have a PE ratio. If it's growing 18 or so, 20. If it's not growing, 12. So I think the memory stocks have gotten a lot of attention. But look at that. This one's selling off. I think it's risky that you buy it at a top, but it's also, they've been going up and up. They just keep going up. So let me see if I have a valuation. Do you have any charts on Rambus, Daryl?
Yep.
All right. see if I've got a valuation while you share the charts.
So I don't know a lot about this company, but they are trading right at their 50-day moving average. Looks like there's been at least one time in November where they dropped pretty significantly below it. That's increasing. The 200's increasing. The 21-day is rolled over and heading downwards. The 5-day is crossed below the 21. And I don't know if it's going to cross over the 50. Probably not, with the prices increasing at the moment. The RSI is right around 46. So it is above the 40 line, but it hasn't crossed into bullish territory, which would be at 50. We do have a sell signal on them since the 2nd of February. Money flow is currently negative, and I see pretty significant distribution over the last probably month. So I think this one may be a little bit of a head fake, because I think the tendency is down at the moment. I would wait on this one if it were me.
And the valuation, I mean, I did look at this in July. I just updated a couple of numbers. It is priced too high, and I could probably adjust the discount rate. But it's just the stock price has done really well. So it's not a big surprise that, hey, it's getting expensive. Could it go higher? Absolutely. Is it an investment I would make? No, it's too high. I can get a better deal on NVIDIA, and I know what I'm buying in NVIDIA, or I can get a better deal right now on TSM, and that's what I'd rather buy. So that is where we're at with Rambus. Thanks for asking, DJ. Let me update my date here. Okay. Thank you, DJ. Good to see your name. Have a nice weekend. All right, guys. So that is it for the stream. Thanks for tuning in. Thanks, everybody, for the week. It was a real busy week. We streamed 3 mornings and 2 watch parties. Collectively, well over 1,000 attendees. And we appreciate everybody's attendance and support. And we've got more in store for you next week. We'll see what happens next week, and we'll schedule our sessions accordingly. Take care, everyone. Have a nice weekend.
Take care.